To the exchange, Utz is dominating the snack food space and stock performance. It was our mystery chart from earlier. The shares are up 7% so far this year, so it's outperforming Pepsi and Mondelez. But things are starting to go from salty to sour, with Bank of America declaring a buyer strike on salty snacks as sales lag way behind the average growth rate of the past 3 years. And it's going to take a lot more than promos to attract new customers. Joining us now is Bryan, Spillane, senior food and beverage analyst at BofA Securities. Bryan, is this a GLP effect? What's going on here?
No, I mean, I think we're still a little bit too early for GLP effect. But look, we've had 20% or greater price increases over the last 4 years across, all the different subcategories in salty snacks. And it just feels like right now we've gone maybe a price point too high. And so I think it has more to do with price points than it does with like healthy choices.
I think you're absolutely right. When I walk in, a bag of tortilla chips is $4.99, and it's not even that big. And I think my dad complained about the price of Doritos the other day. So consumers are taking notice.
Yes, and these are products that are sold at high velocity. People know the price points. You kind of know when you were paying $4 for a bag of Doritos and now it's $7, or in a convenience store it was $1.99 and now it's $3.99. So I do think there's been some sticker shock related to this, and and consumers are also economizing a little bit more. So I think those two forces have kind of pushed together.
And I think at the end of the day, people buy chicken, they'll buy eggs, they'll buy whatever it is that might be slightly up in price, but they know that this is just kind of a purely indulgent item. So based on what you're seeing in volumes, I mean, this seems like it's a pretty sudden and clear break, although Utz is outperforming.
Right. So it's interesting. Utz sits in a price point that's, below the highest priced brands, but above private label. It's a regional brand, good product. So it's actually perfectly priced for this environment. And I think that's part of the reason why they've gained share. And I do think that, if this persists over the course of the summer, they ought to have a very good summer as well.
They being Utz, but if you're Pepsi and if you're Mondelez right now, what do you do?
Yeah.
Do you start rolling? Should we be looking for coupons, buy one, get one free deals, that kind of thing?
Right. So, an interesting storyline over the course of the first half of the year is that these companies went into the year expecting to promote more, like that was going to help sort of stabilize volumes. The promotions didn't work, and so didn't drive the incremental lift. Basically just rewarded your heavy users, but didn't bring any incremental into the category. So it kind of leaves you with three options. One, wait it out and see, if consumers begin to adjust. The second is to price promote deeper, which has some negative consequences in terms of margins, and it's not a sustainable strategy. Or the third would be to maybe consider rolling back prices in general, and maybe have to cut some costs in order to subsidize that.
That's amazing. So they offered coupons, but the coupons weren't big enough, basically.
Right, exactly.
That's interesting. Are you sure, and you'd know from, again, your broader coverage space, that there's not a GLP-1 effect here?
It's, we cover the food companies as well. And, at this point, the number of people on GLP-1s in the U.S. is still relatively small to have that much of an impact. And frankly, we're seeing this volume weakness, not just in salty snacks, but across really all of packaged food and even in the beverage alcohol to a certain degree. So this seems like more consumers economizing as other costs in their household budgets have gone up versus this being a real health concern.
So for Pepsi, for Mondelez, you mentioned that in order to kind of bring the price point down to where the consumer is ready and available, they might literally have to do layoffs. So this is from an economic shift, this is kind of a big deal here.
Right. I mean, whether it's layoffs or reducing other costs, I mean, if in the hypothetical situation where, prices would get rolled back, across the board, that unless you're going to give up margins, it will have to come with some sort of belt tightening as well. So, again, it's not an easy decision and not one I think that would be made quickly, but it's in the range of considerations.
And finally, what are your favorite names in the space? If maybe it's a couple of these names that they can turn things around. I think you still have a buy on Pepsi, for instance, but which ones do you think are best positioned?
Yeah, so within this space, Utz definitely, again, as we described before, has performed really well in this environment. Right now, Coke over Pepsi, just, Coke doesn't have the volume issues that Pepsi does. And I think as we think about Pepsi and Mondelez, the stocks have lagged, but you really need to see the volumes to turn before you start getting more aggressive with those. So, again, I would say it's more Coke and Utz.
All right. Coconuts. Bryan, thanks so much. I love your job. Bryan Spillane, thank you for joining us today.